We might see a bit of a slowdown in global growth this year, but no collapse. Daniel Murray, EFG Asset Management. The ECB have shown that they are open to further cuts to its deposit rate in the future. Though, Daniel, what is your assessment of the euro area's economy this year?
Yeah, I think it's an interesting juxtaposition between the policy versus economy debate in Europe and the policy versus economy debate in the US. So we're seeing with the US that policy is being tightened. Potentially there are some signs that the economy is slowing, when in Europe it's actually the other way around. So we're seeing looser policy being applied, even as the economic metrics seem to be improving and stabilising somewhat. So I think the economic outlook for Europe is really coming off the back of 2 years that have seen the economy shift from negative growth to positive growth, and we're now at a stage in the recovery where growth is levelling off a little bit. The downside threat, of course, that the ECB is very conscious of is that we're going to end up in a deflationary spiral, which of course can be very damaging in a world where there's a lot of debt hanging around. And I think that's really why they're looking to stimulate, perhaps by adding more monetary stimulus.
Okay, well, moving on to China, which has consistently been in the news this week, with alarming trade data results causing distress across the globe. There have been growing concerns of late, though to what extent is this panic justified?
So our view on the Chinese economy is that it is hard to argue that it's not slowing, but that slowdown is, at least partly at the moment, structural. So we're seeing a slowdown in the trend rate of growth, which naturally happens as the economy is maturing. On top of that, of course, we have to overlay the cycle, and China is just been through a period of a couple of years where there's been a cyclical slowdown on top of the structural slowdown, and that's been quite a difficult situation for the world to understand and also for the policymakers to handle. And what we saw last year with regard to China was there was quite a lot of stimulus applied throughout the year, both targeted and specific monetary stimulus as well as some fiscal stimulus. That stimulus always acts with a 6 to 12 month lag, and so we're starting to see the benefit now of the stimulus that was applied last year. So some of the metrics such as auto sales, retail sales, and some of the PMI data is just starting to level off a bit, and that's exactly as you would expect. So our expectations are that from a cyclical perspective, we're going to start to see some stabilisation in the Chinese economy in the first half of this year.
And lastly, due in large part to the slowdown in China, RBS announced this week that they are expecting a cataclysmic year for the global economy, even urging investors to liquidate all assets apart from high-quality bonds. So how do you project the global economy's outlook for 2016?
So our view is that growth this year might be a little bit slower than last year. The developed world, perhaps we'll see developed world growth around about 2% this year. That's our sort of core expectation, which is it's not particularly rapid, but nor is it consistent with a sort of catastrophic situation. Clearly, there's bigger threats in certain parts of the developing world. Brazil is looking particularly vulnerable, has this sort of awkward combination of a bit of a credit cycle that's unwinding, a difficult political situation, pressures to consolidate fiscally, and that's a bit more challenging. Clearly there's some geopolitical risks around. But I think that the developing world actually looks all right. Now, of course, it's always incredibly hard to anticipate recessions before the year. And to some extent, financial markets have a record of pricing in recessions before it's evident in the data. But I think at the moment we're not seeing the sorts of signals that you would normally anticipate with a recessionary environment. Those things can, of course, change very quickly, but at the moment our core expectation is that we might see a bit of a slowdown in growth this year, but no collapse.
Thank you, Daniel. That's all for this week, but be sure to check back on Monday for the week ahead with Jessica Walker. Goodbye for now.